All right, we are live. We're here. What is up, everybody? Welcome to another episode of What the FICC. Spencer Israel here, joined by Ian Culley, who is head of FICC, fixed income, commodities, and currencies at All Star Charts. Mr. Culley, happy Friday. How we doing?
Hey, happy Friday. Long time no see.
Long time no see. Last time I saw you was a couple hours ago on the morning show. All right, let's get right into it. We have our FICC market recap. As always, we got a lot going on. Gold, copper, treasuries, dollar, you name it. Let's get the charts up. What's going on here?
First up, gold. Gold undercut a potential support zone marked by those pivot lows from April. Keep an eye on that 1980 level. Zooming in around 1975 here. Undercutting that level and trending lower. Now, starting to dig in a little bit this morning after Powell made some remarks. I have no idea what he said.
Me neither.
But gold up 18 cents.
All right.
Excuse me, $18.
Those are the futures. What about the equity side?
GLD, as long as it's above 185, you know, the risks are to the downside. But if the bulls step in and drive prices, the futures price above this 1975 level, I think it's just a matter of time before we see GLD back above 185 again, above their path of least resistance towards 240. That's my target over longer time frames. Now, switching gears to crude oil, talk about bulls stepping in and repairing the damage. That's this long wick here we see highlighted by that green circle. Mentioned this previous episodes. This is what it looks like. Bulls stepping in, driving prices higher, taking control of the market. A little bit of a bullish divergence here in momentum on the 14-day RSI. However, bulls run into a significant amount of overhead supply at that 74 handle. So a lot of potential resistance up there. As long as crude oil continues to churn below that level, you know, my near-term outlook for crude is neutral to lower towards 65. But if and when it get back above 74, I think we could see that $83 in crude again.
All right.
USO oil ETF, USO, focusing on potential support, those pivot lows from early April, around $58. And what really has my attention right now when I think about crude oil, when I think about copper, just pro-cyclical commodity groups in general, is the lack of bullish rotation. There's no constructive rotation right now in the commodity space. Instead, energy contracts continue to trend lower. Copper recently broke down. Industrial and base metals are resolving lower, undercutting pivot highs from last summer. You know, this is the type of behavior we see in bull markets. It's actually the opposite. When we look at Dr. Copper, back below that 378, 375 level, I mean, that's not what commodity bulls want to see. Or just cyclical, bullish, you know, any kind of cyclical asset. Talk about, you know, FCX. This is a Freeport McMoran bellwether in terms of copper mining. You know, there's plenty of these near-term 6 to 7 month potential topping formations across the cyclical sectors right now.
So all of these metals charts don't exactly at least maybe the how would you say it, the more risk on versions of them, you know, copper, etc. You're not feeling great right now.
No, absolutely not. As long as copper's below this 378, like I said, 375 level. No.
Okay.
No, risks are to the downside. It's messy. You know, bulls need to step in, drive prices higher, reclaim this level of former resistance, turn support. That's what we need to see, not only for copper and commodities, but for cyclical assets as well. You know, think about the industrial sectors. You know, if we're going to get a healthy rotation in the stock market out of the growth names that are resolving higher, and we start to see some participation move into, you know, materials, XLB, into industrials, XLI, and those sectors, then Copper needs to get it together.
Get it together, copper.
Come on now. But hey, silver lining, or just, FCX hasn't broken down yet. So as long as FCX is above that 33 level, I got to give the bulls the benefit of the doubt. I just need to see them show up in the futures market.
Okay.
But what's another interesting point regarding commodities, just the general commodity space, is that not only are we seeing a lack of bullish rotation supporting an uptrend, that bright spot, precious metals, gold, silver, they're losing relative strength. We had a bearish to bullish reversal relative to the broader commodity space. This is our precious metal index versus our equal weight 33 commodity index. And that's starting to pull back and resolve lower. A potential failed breakout here. So over the past few months, there have been these pockets of strength. Despite the selling in energy, we've seen the soft contracts, and we're seeing precious metals really catch higher and explosively.
So bottom line is, it was an amazing start of the year for the metals and gold, silver, copper, but the trend has cooled significantly. That's the bottom line.
Absolutely.
Yeah.
Absolutely. Okay. And with copper breaking down, crude oil, hanging in there, it's resilient. Energy contracts are holding above significant support levels. Nonetheless, if we don't see some rotation here into the metals, and we see precious metals start to catch higher, then I gotta imagine that the CRB index is going to follow the Bloomberg commodity index and break down here.
Yep.
Same for our equal weight commodity index. And it looks like it's already starting to do that. We need some significant downside resolution to confirm that first. Now, switching gears to the bond market, what's really interesting about the bond market is that you got tech, and you have all these other long duration assets that are resolving higher from multi-month reversal patterns, basins. Bonds just haven't gotten it together yet. And here's the TLT. This is a 20-year, this is a long duration treasury bond ETF. That level's still around 110. If and when TLT can get back above 110, I think the next near-term target is around 120. But we're just not there yet. We're just not there yet. That's a big divergence. I have a chart I'll share later in the show, highlighting that divergence, that bifurcation between long duration assets right now. I think it all comes down to, it's still rates in the dollar. This is an overlay chart of the US 10-year yield and the US dollar index, DXY, with a 126-day rolling correlation in the lower pane. And look at all that green. It's strong positive correlation between these two charts, and both are catching higher, right? The dollar digging at that 101 level, around 103.50. Now pulling back a little bit today, but as we see the dollar index, it never hit an oversold reading. Never registered a 14-day RSI reading below 30. Even as it fell 10%, which is a big move for the dollar index. Now, this isn't a stock; these are currencies.
Right.
Now it's catching higher, heading towards that 105 level. Look, we're getting close to 65. Above 70, and we're getting a bullish momentum print. We're getting an overbought reading, which is just signaling to me that the bulls are back in control and that further upside potential lie ahead. So something to keep in mind. And what's interesting,
September's level is back in sight in a few weeks, few months.
Yeah. I mean, if we're getting back up near September's levels, then I imagine S&P 500 is having a rough go.
Yeah.
Stocks, risk assets are all having a rough go. Gold is not breaking out to new all-time highs. We shall see. But, I always like to dig beneath the surface of any index. And when it comes to the dollar, these next three charts really sum it up. Euro, 57.6% of the US dollar index, falling back below that 108 level. You know, euro below 108, dollar index has a chance at that 105 level and higher. Euro reclaims this 108 level and continues to catch higher, then we're seeing the dollar continue to churn sideways, potentially taking out that 101 level. Japanese yen, 13.6, 13 and change in terms of its weighting in the US dollar index, breaking out of a multi-month consolidation here, back above 137, and a risk to the upside towards 142.50. And then the pound pulling back to a breakout level, and this potential, you know, head and shoulders, inverted head and shoulders reversal pattern. You know, I think if we see the pound back below 124.25, then dollar index is probably back above 105, ripping higher. There's something to keep in mind. That's what really is on my radar regarding the currency markets right now. Those three major US dollar pairs.
All right. Let's look at some of your favorite charts here. Every show we try to, I ask you at least to come up with at least one, as many as three charts in the entire FICC space that's where your interest is right now. That's what you're focusing on. What do you got for us today?
Sugar. It was my favorite chart heading into the year. I think in early January, I laid out like my 7 favorite charts for 2023. You know, I was bullish wheat. I really like those wheat charts. You know, wheat broke down. You know, ended up having to short wheat. But sugar has been an absolute monster. Ripping, completing this large basing formation, and just almost vertical move here up towards 27. Now, when I see the silver chart, it's a potential bullish continuation pattern in the form of a flag. You know, if this is a half mass flag, we could see prices up around $30, $32. We'll see. I'm not sold. I'm not sold on that. You know, this bearish divergence here in the 14-day RSI, you know, and just the selling pressure that it's experiencing today. Yeah, you know, we'll have to wait and see. The potential is there. If and when sugar takes out that 26.75 level, I like it long back up towards 30. On the other hand, if we're breaking back below 25, you know, we're back below where we at today. Right now, July contract sugar trading at 25.74. Yeah, if we're back below 25, back below those pivot lows from earlier in the year, I think we could have a very steep sell-off. It take us back down in the low 20s.
This next chart was one that you had brought with you this morning to on your segment on the morning show, right?
Yeah, absolutely. And this is you know, speaking to this earlier, looking at the TLT chart and that nice base that it's carving out. Growth sectors are resolving higher from similar basing patterns, right? XLC breaking out, XLK, the tech sector resolving higher from a basing formation. And you see it show up in the growth versus value ratio. Like growth is outperforming value, which also kind of speaks to the lack of healthy rotation that we're seeing amongst or between the pro-cyclical commodity groups, right? Value areas of the market remain under pressure while these tech and growth areas are catching higher. Now, in that environment, expect other long duration assets like bonds to follow suit. Just haven't yet, right? If you look in the lower pane here, we have a 21-day correlation study. Far more green down here than red. Now, these relationships obviously do break down. Correlations come and go, but more often than not, they get back on track and they're positive. So if tech and growth names are going to continue to catch a bid, I think it's just a matter of time before bonds follow suit.
A question for you. So yeah, you're saying as the growth value line goes higher, so too should TLT. Is this just an indictment on bonds in general though? Is that what this could be? Just bond forget it doesn't matter where on the curve you are. It just bonds are, you know, people have other things to do with their money than bonds.
Yeah, are you saying that
I'm
after
saying
last year,
I'm
maybe
saying
there's some recency bias where investors are a little spooked from that
yeah,
historic
for sure.
sell-off,
For sure.
right?
You're saying that TLT should go, in theory, at least should go higher because it's a longer term duration asset as long as the growth versus value line goes higher too. It's not doing that. And I'm asking you if that's less an indictment of TLT and more of just nobody wants bonds after what happened last year.
Yeah, absolutely.
Okay.
Absolutely. I think it's very probable. I mean, bonds became a risk asset last year for investors. I mean, the 60/40 portfolio was just a disaster. And then earlier this year, US Treasuries became a risk asset for regional banks. So yeah,
Yeah.
maybe there's just
Never thought I'd see the day, right?
yeah, right. So maybe there's just going to be a bit of a lag here. That makes sense to me.
Yeah.
But
Okay.
sooner or later, I imagine this relationship is going to get back on track. So I'm keeping an eye on bonds. Definitely keeping an eye on those growth sectors to see if we continue to see both relative and absolute strength.
Yeah. What's next?
What's next? I brought this one today too. I didn't want to leave the morning show without sharing it. One of the stories or one of the charts that you guys brought up earlier in the morning was the divergence between tech stocks and Bitcoin. Now that's a relationship. We can think of Bitcoin as another long duration asset. I know Lindsay looks at Bitcoin and just coins in general as tech stocks. Really, they're just another form of tech stocks. So with that in mind, Bitcoin isn't necessarily following. It's not following growth names. It's more in tune with gold right now, and I think that speaks more to this the dollar. Right? It speaks more to interest rates starting to rise again, and tech growth in general just doesn't seem to care. They really just don't seem to care. Maybe they're looking further out. They're pricing down the road, second half of the year, fourth quarter, and rate cuts in the future.
All
We'll
right.
see.
All right. We titled the show Potential Breakout in Cotton. So let's move to our breakdown segment here. We don't have any sleepers today, so we'll move to the breakdown segment and let's talk about cotton. What are you seeing in the cotton market that made you wanna highlight this today?
Well, cotton was one of our sleepers. I think it was last week or the week before. We brought cotton in as one of our sleeper charts. And, softs in general, like cocoa, sugar, coffee, have all been doing really, really well. That's been one of the areas of the commodity space. That's been one of those pockets of strength.
Mm-hmm.
So is cotton next? It's kind of where my head's at. It's also been pounding this key retracement level from below. Get all those contact points. Then this level acted as resistance like in the spring of 2021 before prices resolved higher, retested, became support. So this is a key polarity zone going back a couple years. I think it's just a matter of time. If copper's back up towards that level, we have momentum improving on the 14-week RSI. If and when the July contract is back above 88.34, let's just call it 88.50. I like cotton long with an initial objective up around 106. You can see here that it's still in a bearish regime, but it's in the upper bounds of that regime. So I'm looking for a print above 88.34 and a bullish print, a reading on the 14-day RSI above 70. And what's really interesting is that historically, now this is just the
Well, what is this?
This is the seasonal chart for the electronic contracts. This is only going back to 2008. But seasonally, May is the worst month of the year for cotton. But cotton's up almost 7% so far this month.
Is there a reason for that? Does it have to do with the harvest or the weather?
Yeah, I mean, it just there's more demand. It's just increased demand. Yeah, and you know, when I see this, it just kind of tips me off that there's an unseasonal demand for cotton, and that just speaks to an underlying strength that when I see these, when commodities and just assets buck seasonal trends, especially to the upside, I take note of that.
Wait, so you're saying usually there's less demand for cotton in May, June, July. For whatever reason, this year there is more demand.
Yes, absolutely. I like that. I like that.
That's interesting.
So yeah, again, you know, this was a sleeper chart a couple of weeks ago. It's starting to develop. You know, who knows? Maybe, you know, maybe it continues to churn below this level for another 6 months, another year, another 2 years. Maybe it never gets back above 89, 90, you know, who knows? You know, but if and when, I want to buy on strength, targeting 106.
You've identified a key level, and now you sit back, you sit on your hands, and you watch and you wait, and
wait for those alerts to go off.
Exactly right. Exactly right. Okay, we actually have a couple of questions here in the chat from me, second class citizen. First, I guess we'll do this one. This is more of a broader question. Do you think consumer commodities are seasonal or based on agricultural production, or just what are your thoughts there? I guess the cotton chart would indicate that yes, they are seasonal.
Yeah, I think consumer commodities are seasonal. Absolutely.
Yep.
Yeah.
And then he wants to know, I don't know, I'm sure you have this chart lurking around somewhere, the gold silver ratio. Do you have that one somewhere?
You know what? I do.
Because he's asking about that.
Can I drop it in can I just drop it in here?
Yeah, go for it. Just drop it in.
Let's do it. Let me move this over. Actually, you know what?
I knew you would. I wouldn't have asked if I didn't think you'd have it.
Oh, yeah, I got it.
Yeah.
It's actually starting to turn up a little bit. I looked at it this morning.
All right, let's see it. This is from me, second class is in the chat. Any more questions on the chat? Drop them in there. We do the show every Wednesday and Friday at 11:30 a.m. Eastern time, right here on Stock Market TV. Let's see what we got. By the way, if you're watching and you think you like what Ian's saying and you like what we're doing, just drop us a like, hit that thumbs up button. We'd appreciate that. The likes do help us in the eyes of you. That's why everyone on YouTube asks for likes, because YouTube rewards videos with more likes. So the more likes we get, the more people will see this video. So we'd appreciate that. Thank you very much.
There we go. Got a couple charts here.
Oh, yeah.
Gold ratio overlaid with gold. This is the way I like to look at it.
Nice. Oh, yeah, that looks good. Let's see it. Nice.
And then here's another look here. Gold's starting to break down a little bit.
We're on a bit of a delay, so I don't know if it's up yet. I hope it's up on the screen. Okay. If it's not, Gene, just pop that bad boy up.
Got another one too here.
There we go. There we go. Sorry, my video's on a delay. We're like 40 seconds ahead of you guys. People watching. So, okay. Do you want to talk about this chart?
Yeah. So the silver gold ratio. Silver's, you know, bigger picture as we zoom out. It's still underperforming gold. Right. So that's risk off. Right. Silver's a high beta play. So when silver's underperforming gold, when the silver gold ratio line is catching lower, investors are pulling risk off of the table, right? So that's what we're seeing here. It's finding resistance at a key polarity zone, acted as support late 2021 throughout 2022, and now is acting as resistance. Zoom in a little bit, and you can see as gold futures continue to make new highs, continue to catch higher, a silver gold ratio was presenting a heads up, like, hey, look, made a lower high. It made a lower high in May compared to the January high, whereas gold was making fresh highs compared to its early 2023 high. Right? That divergence, that bearish divergence in the silver gold ratio was a heads up that, gold running into this heavy zone of overhead supply, was running into that level as risk appetite was waning. So there was a higher probability chance that gold was going to consolidate here. Now, what's interesting is in the near term, silver's starting to outperform again. It's digging in at this level here. That's got a lot of action, a lot of memory. So it'll be interesting to see in the coming weeks whether or not investors will turn to silver, looking for that beta, looking for the juice in gold's crazy cousin. And if so, then that sign of risk appetite will add to a bullish conviction for gold and just precious metals in general.
All right. Yeah, I hope that answered the question. Thank you very much for the spontaneity. Ian Culley, who is the head of FICC at All Star Charts. If you want access to Ian's research, there is only one way to get it. That is by joining All Star Charts Premium. The best way, if you're watching this, the best way to join is to just email this email. I'm going to give it to you right now. I'll put it in the chat as well. It'll be on the screen at the end too. questions@stockmarketmedia.com. It's in the chat. I just said it again. Question. It's also should be on the bottom of the screen there. There it is. It's on the bottom of the screen. questions@stockmarketmedia.com. Email us. Say, hey, I love what Ian's saying, and I want to get more of his charts, and we will talk to you about that there. I think that's it. Ian Culley, any final thoughts for us?
Oh, have a great weekend, everybody. Get outside. Enjoy the spring weather.
Words of wisdom, get outside. It's beautiful up here in the tri-state area, right outside New York City. It's like a very pleasant 65 degrees. Nice cool breeze. You'll love to see it. You'll love to see it. All right, Ian, have a great one. Have a great rest of your week, and we'll see you next week.
All right, have a great weekend, everybody. Peace out.